We're talking to clients. The most frequent term you've heard was, well, we got squeezed out, right? We got squeezed out in all our shorts. We got squeezed into value. We had to give in. We hear what you're saying. We hear all the bearishness. We're sort of not really convinced about this uptick and about a genuine upswing in the data ourselves. But we had to give in into the year end because we got squeezed out.
Yeah, there's been a sentiment rally, I think, that has taken the market to a point where the fundamentals will need to justify it. The PMIs look like they will justify current levels, but you need PMIs not just to flatline, you need them to rise to get more performance out of the market. We're still somewhat optimistic that will occur to some extent next year, but the autos is an interesting sector where it's been an underperformer for multiple years because there's been peak auto sales, and they still aren't increasing. They're just normalizing from negative growth rates, particularly in China. So as much as part of the rally has been a cyclical recovery, including some of these auto companies recovering from very, apparently cheap valuations, there's still fairly deep structural concerns for these companies that have expensive transitions to do to electrification and balance sheet headwinds.
Max, as we consider where you want to be invested, and one of your causes, you're still overweight developed market versus emerging market equities. There was a line that crossed yesterday around the Brazilian stock market chasing new records. Where did that come from? Quite extraordinary. So as we see this huge focus around developed markets, are many investors missing the game on EM?
Not really. I think on EM, it's particularly also a currency issue, right? If you look at currencies this year, how they've decoupled actually from EM rates. So EM rates have been rallying. Typically what you see is that EM assets as a whole are rallying. So you typically see sort of a high beta correlation there. That hasn't happened at all. So you've seen EM duration rally this year, but EM FX really hasn't followed through. If you look at DM against EM this year, it's down almost 11-12%, right, in terms of differential. I'm not fully convinced we see that EMFX picture really ticking up now, particularly from a cyclical perspective. If I look at the dollar at the moment, if I just purely sort of 10,000 mile point of view, if I look at the dollar at the moment from a very broad multi-asset perspective, it's nothing else than long dollar is short cyclicals. Right? If I look at the four largest currencies in the trade-weighted dollar, it's renminbi, it's euro, it's Canada dollar, it's Mexican peso. It's either EM and or cyclicals. Unless I can really say, look, this is going to be a sort of a V-shaped recovery in the macro data, something that markets are pricing at the moment. If you look at sort of the differential between equities against DM rates at the moment, that's pricing a PMI close to 52. So we've really have to see the PMIs bounce quite heavily at the moment. Unless we see that, I can't see big downside for the dollar, and therefore I can't see EM outperform against DM in the equity space.
And I take your point on that, but there has been an outperformance by the Brazilian stock market despite all that. Joe, what happened?
So Brazil's fascinating because it really points to the idea that active management is having a comeback. Global investors typically still treat emerging markets as a block, and even worse at the moment, the block between debt and equity has changed substantially. Equities are primarily 70% Asian equities in the emerging market index now. So Brazil you don't notice it in emerging market performance because it's quite small, and yet it was very good, partly because they're having a consumer credit cycle that's quite strong. It's not industrial, it's not exports, it's consumer, a lot of leverage. It's been supported by a weak currency because they've got weak externalities. So it has done very well. We did have a short position on Brazil in previous years, and we took that off because this recovery was coming through. So making sure you've got managers and positions in funds that you're invested in that are taking active granular positions, I think is really important for 2020 because of exactly that sort of situation.
Has Jair Bolsonaro missed his moment? I see a lot of, the FT had a story on this, suggesting that the reform program in Brazil has stalled somewhat and that he had an opportunity to be more aggressive and it's been squandered. It's one point of view. Elsewhere, the argument is actually he and the central bank team are getting on top of some of the inflation pressures, and they've benefited hugely from the Chinese substitution of agricultural product source, given the row with the United States. Have you got a strong view, Max?
Look, my problem with that is if you look at Brazil, and if you look with December now, we're in a sort of outlook year ahead time. If you look the last couple of years with Brazil on just broad GDP basis, the last couple of years you had all economists sort of saying on a consensus basis, oh, we're going to grow by 2% next year, just give or take. Guess where we're at now? Give or take 2%. So it's a bit of a problem that I see. Look, Brazil has failed to deliver the last couple of years to sort of meaningfully come out of and rebound from this very stark recession they had early in this decade, right? So I think the downside risks there are really pretty meaningfully. That said, I think our economists and also our FX strategists are somewhat optimistic that there may be something coming through now in 2020, and that we do see a little bit of a recovery on the dollar real.
Just to switch back to the active management story, which I think is very interesting as we run into next year, given that we've got so much M&A to talk about. And the team just remind me by slapping Montclair up on the big wall here about the rumours that are circulating, and Karen's going to take us into that story in just a moment. But the one I was interested in overnight was Aston Martin, because we got a very interesting move in the Aston Martin share price as people looked at the possibility that Lawrence Stroll might actually get involved in this story, the F1 linchpin, kingpin, I guess, who's got fashion interests as well as racing interests at this point. Special situations, M&A opportunities? I mean, is there any way of rationally working out what you want to own in the space?
Absolutely. So this is a really important theme. You're seeing more and more companies take action, either M&A, which is now running along at quite a humming rate, but particularly private money, where there's just this wall of money continuing to seek private assets and huge war chests that can't really be put to work because the supply of private assets isn't growing that fast. So you're seeing more LBOs, like the Walgreens LBO. You're seeing more spin-offs and carve-outs, particularly where companies need to improve their balance sheets, like we've seen with a few Swedish companies recently. So special situations of a variety of forms, whether it's M&A or restructurings, Swiss Re, selling off a unit. This sort of activity is definitely ramping up. And for equity investors, there's good opportunities there. Even for multi-asset investors, the theme is big enough. We can find a range of stocks that suit some of those themes.
Let's just dive into the luxury story a little bit more, as Italian skiwear brand Moncler has downplayed reports of a merger with France's Kering. CEO Remo Ruffini admitted that the two luxury firms had talked, but he added he maintains contact with other sector players and that there's no concrete plan under consideration. Tiffany & Co.'s third quarter results missed expectations on both the top and bottom line. The US jeweler, which has agreed a $16 billion takeover by luxury giant LVMH, reported stagnant same-store sales growth on the back of weakness in the US and Hong Kong. And that probably illustrates why there's a deal on the table for Tiffany at this point, because luxury is going gangbusters in many of the different segments we've seen from many different players also on the boards. When it comes to Moncler and some of the talk we've seen this week, it tells you about the appetite for the conglomerates Kering and LVMH to just keep on growing. So what jumps out to you about how investors need to weigh up the luxury sector?
Well, look, it's not only the luxury sector; it's really across the board, right? Where you see, sort of consolidation, you see M&A, what we've just talked about, and basically that tells you there's a lack of possibilities to grow organically, right? That's what it tells you. In an environment where you're sort of modeling through from a global growth perspective, capex and driving up capex massively, right? So your choice between either growing organically or inorganically is very clearly skewed towards growing inorganically. Because simply, if you look at, for example, some of the shares that have driven up, not only in the luxury sector, but again, more broadly across sectors, if you look at these stocks and these sectors that have driven up capex, they've genuinely been the laggards in the last decade, right? Because obviously investors are saying, look, I want to see M&A, I want to see share buybacks, I want to see higher dividends, pay me back, and then I'll buy you a share.
So just talk to me about the merits of buying a crown jewel, because I've been somewhat critical about Moncler and Kering taking over this asset because it's done so much with the brand already. Is there an argument for buying crown jewels, and does that work out in transactions?
I think from a single transaction point of view, perhaps not too sure about that. I think from a multi-asset perspective, it probably doesn't make too much sense, because we really want to be a bit more diversified. And if you take up too much idiosyncratic risk, which arguably you are doing in that very instance, right? It probably, from a multi-asset perspective, at least in our space, I would argue it probably doesn't make too much sense. From an equity-only perspective, it's a different story.
A lot of agreement from both of you, it seems, on Japan as I look at your notes here. Let's just revisit the argument for owning Japan at this point, because I think we got some pretty ropey numbers overnight around some of the strength of the economy stats. I've momentarily lost my piece of paper here, but why Japan? Why now?
If you look at Japan against Eurozone, if you look at the underperformance of Japan equities against Eurozone equities, that's been peak to trough over the last year and a half. It's been about 25%. That really isn't justified. If you look at the Eurozone, you look at the sort of Eurozone outflows, for example, equity outflows. Arguably, people aren't really particularly optimistic about the Eurozone, right? On the other hand, if you look at Japan, why would you be so pessimistic? Why would you say, look, if we're now ticking along, we've seen the trough in PMIs, right? We're sort of seeing peak in recession fears. It probably doesn't make much sense to say, okay, yen's going to price in another recession fear kind of scenario, right? If you see sort of yen sort of ticking along in the next couple of months as well, you see those punitive base effects that you've seen on relative earnings revisions between Eurozone equities and Japan equities. You really see that start fading. You see much more support for Japanese equities, particularly against Eurozone equities.
Here's my piece of information. I found the right piece of paper. Japanese household spending negative 5.1% year on year on the series. The expectation was negative 3.2%. So this is worse than the expectation. But is the argument that we don't really have to worry about what Japanese households are spending at the moment because the reasons for owning are different?
At least I wouldn't necessarily, because if I think about it, particularly from a relative perspective, Japan against Eurozone, both aren't really doing that well, right? So it's not, again, from a relative perspective, if you think about it, I'm not particularly concerned then what an absolute number is doing, right? On the other hand, what I am particularly concerned about is the earnings revision picture, is the valuation picture, again, on a relative perspective. Look at the relative the relative valuation picture, Japan against Eurozone, on a dividend yield perspective, on a PE, on a PB perspective. Japan has become way too cheap against Eurozone. It is not justified at all.
Yeah, Japan is the most global regional equity market. Europe's pretty global, but Japan, pretty much 100% of the profits of the Japanese market come from exports. That's not to say there aren't some profits in some areas in the domestic economy, but on average, the domestic economy does not produce profits for Japanese companies. So therefore, you've got a big impact from a weakening yen, which was supported by trade tensions easing a little bit. But most importantly, the early leading indicator has been the tech cycle. We've had a tech upswing. We've had a little bit of a recovery in the expectations for the industrial cycle, which is also very important for Japan. So if you have a tech upswing and industrial upswing and some easing in trade tensions, you'll get Japanese equities doing very well. In addition to that, they are now cheap. They are good value, while they also have ROE improvement still ongoing. So there is quite a good story in Japan. The real issue with investing in Japanese equities is what do you do about the currency, because the exports are so sensitive to that currency translation effects. And so we do like owning quite a lot of Japanese yen for diversification, and we continue to do that, even though we've recently been adding Japanese equities to our portfolios as well.
Gents, we're going to leave you for a moment. We've got to take a quick break. We'll be back after the break. One of the other stories we need to tell you about this morning, the latest on impeachment. House Speaker Nancy Pelosi gives the go-ahead for impeachment proceedings against President Trump. We'll talk about that in a moment.
Now get greedy whenever you want. Subscribe to the American Greed.
There's a growing threat from Moscow Center, and Britain's intelligence service think they've found the man for the job.
The natural-born agent runner is his own man. He may take his orders from London, but in the field, he is the master of his fate and the fate of his agents.
A powerful portrait of our times, told with unflagging tension by one of the greatest novelists of our age, John le Carré's Agent Running in the Field. Available now at Waterstones.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
At Lidl, we're big on the sweetest Christmas and those happily ever afters. Like our winter warmer deluxe mince pie strudel at just $2.99. And our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
To the sideline, the Van Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Flash on the wires around Tesla coming through from China. And this is fascinating. You may recall that they've built out Gigafactory number 3 in Shanghai. And now the China Industry Ministry has included Tesla's China-made vehicles on its new energy vehicles subsidies recommendation list. All quite interesting when you see the targets coming out of Tesla for the Chinese market. About 3,000 vehicles that it's aiming at per week. All this after getting approval to proceed with mass production mid-last month. So green signals for Tesla. And let's face it, it could do with a little bit of help.
Yeah, no, I was just clarifying with the team that these are file pictures. So I was looking at them for a moment. I thought, Elon Musk is in China. Isn't he currently in a court in the United States? Having around a Thailand case. Yeah. Well, we won't get into that because I'm not sure that the audience wants to be reminded of the details of the story, but you can look that up. But clearly that could have implications for him.
But very company-specific story, right, as we talk about trade tensions between the United States and China needing some progress on a deal. And here you have an American company in an innovative space putting production facilities in China and also getting a little bit of a helping hand, it would seem, from China's industry ministry.
Yeah. Nothing generates as much controversy as an argument among analysts about Tesla and whether it makes it over the medium term, I guess, at this point. Gents, have you got anything you want to throw in on the electric story? I mean, it does seem to me...
You both look so enthusiastic. Facial expressions.
When you talk to anybody who knows the OEMs in Europe very well, they tell you Tesla is living on borrowed time, because the response when it comes from BMW and Volkswagen and co is going to be very impressive. But we're still kind of waiting to see that come through and take on Tesla.
I'll take that as a complete auto amateur. Obviously, as a German, I have a German car.
Yes.
But if you look at the German car industry, right? If I look at my sort of hometown news, Audi has just announced to lay off, I think, close to 10,000 people last week, right?
Yes.
Because they've missed last wave. BMW, yes, the sales figure haven't been that dismal this month, but as you said, we shouldn't extrapolate too much from that. I'm not sure that sort of classic car makers have really caught up fully to that cycle yet.
I don't worry about the macroeconomic implications of the transition to electric, because it just involves far fewer people in the entire supply chain. It takes fewer people to produce the cars. It takes fewer people to maintain the cars. So one of the risks we're seeing for 2020 within Europe is that jobs are weak already, and if they don't stabilize and they get worse in Europe next year, then Europe still has a problem. Jobs are a lagging indicator, so hopefully the recovery is there, but to the extent that we're talking about job losses in the auto sector, jobs are still a problem in Europe.
Max, thanks so much for coming in. Good to see you. Max Kettner, multi-asset strategist at HSBC. Jerry's going to stay with us. We'll pick up the conversation with him shortly. What is happening over at OPEC? They walked out of the dinner that was planned. The meeting broke up at 11. Nobody was really talking, but the market believes there is a cut coming of 500,000 barrels per day. We're live from Vienna in just a moment.
It's the ultimate pre-market news show. Now,
'tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
At Lidl, we're big on the sweetest Christmas and those happily ever afters. Like our winter warmer deluxe mince pie strudel at just $2.99. And our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
On 3, our unlimited data is actually unlimited. Like for reals. None of this, we're so unlimited, but nuh-uh, you can't watch your fave Christmas film endlessly. Or dead scroll inspo for tree decorations until 4 in the morning. We wouldn't do that to you.
We have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Ho, ho, ho.
Switch to 3, in-store or online. See 3.co.uk/unlimited-data.
Ah, Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in-store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Signs boost market optimism at the open as President Trump claims talks are moving along. Beijing says it'll waive tariffs for some U.S. agricultural products. Saudi Aramco shares price at the top end of the range as the oil giant raises a record $25.6 billion. It's the world's largest ever IPO, but the valuation falls short of the kingdom's $2 trillion target. OPEC and its allies gear up to endorse a 500,000 barrel a day supply cut amid new reports that cartel members will make the lion's share of the reductions. And Swiss Re jumps towards the top of the stock 600 as the reinsurer says it will sell its British unit to the UK's Phoenix Group in a deal worth £3.25 billion.
Stock markets in Europe having opened for half an hour so far, and we have seen some movement to the upside. It is a somewhat cautious day of trade, but that's probably to be expected with so much news ticking around on trade. More positive as we look to close out the week with comments from President Trump and the Chinese sides both suggesting progress. We've got the jobs report later on today, always a big ticket item for the market, and data watching, very key sport as we try and guess where the central bank is at this point around a mid-cycle adjustment and going into 2020 with some weakness in demand globally still. And of course, all watching the oil market very closely around this OPEC Plus meeting for production cuts. So the Stoxx Europe 600 with all those items tracking along in the backdrop for investors to weigh up is just ahead by 0.1%. Stronger markets include the FTSE here in the UK after what has been a fairly rough week trading around strength in pound. Also, the French market trading ahead up about 1/3%. Let's just drill into the sectors and you can see how it plays out. It's quite interesting to see oil and gas not exactly performing despite some of the production cuts. It is, in fact, the weakest on the boards, sliding now by 0.2%. Other patches of weakness around some of the defensive, telecoms and utilities. Technology, though, out in front, some decent gains of about 0.5%. And in fact, you can see all the percentage gains on the top charts here. Not bad for the Friday session for insurance, travel and leisure, financial services. In terms of stocks, let's see where the big movers are. In terms of the stocks are moving, Glencore 1.8% to the downside. Better performances from the outset around Marks and Spencer, leading in the retail basket, 3.3% pop. Virgin Money doing nicely. And we've been talking about Swiss Re and the decision to sell its reassure business to Phoenix in the UK, and not a bad price tag achieved after a failed IPO earlier this year, 2.5% firmer for the stock price. Jeff.
Yeah, thanks very much indeed. Just got a little bit of UK house price data. This survey is from the Halifax, the November house price number, plus 1% month on month, which gives us a year-on-year number of 2.1%. So 2.1% gain across the year as a whole, 1% month on month from the Halifax this morning. Shall we move on? Good. Let's talk about oil and leave the house prices to one side. OPEC members will make the lion's share of oil supply cuts when a reduction of 500,000 barrels a day is endorsed later today. That's according to Reuters, which says the group will take 2/3 of the burden and non-OPEC members will take 1/3. That's where we are on the price. If you're not looking at the screen, I can tell you WTI crude is effectively flat at $58.42. Brent crude up modestly at $63.43 a barrel. Dan is with us from Vienna on the latest. So Reuters think they have a little bit of an angle on this story. What are you hearing, Dan?
Jeff, good morning to you. Well, we have relocated now outside OPEC headquarters here in Vienna, where in just a short while we're expecting ministers to arrive for day 2 of deliberations. Now, this comes after a very contentious end to day 1. We saw talks extending for 6 hours last night, the meeting not finishing until about 11 p.m. And it's very clear that some ministers were very angry with what happened inside the room. We've heard reports of some delegates actually choosing to leave the room. At the same time, last night's gala dinner and cruise also cancelled, and the final press conference also not going ahead. So this sets us up for a very contentious day of negotiations. In terms of the headlines coming out of that event, well, we now understand that these ministers are actively considering a 500,000 barrel cut to production. And make no mistake, this OPEC meeting has been turned on its head as a result of that. Coming in, the initial expectation was that we would just see a rollover of the current 1.2 million production deal, either out to June of 2020 or, in a best case but less likely scenario, perhaps to the end of 2020. Then enter the Iraqi oil minister, who said on Sunday that the group was actually considering a 400,000 barrel cut. Now the figure at 500,000 barrels, which would bring the overall cut out to 1.7. Still a number of big questions here, including how these cuts are going to be distributed and what role Saudi Arabia is going to play in shouldering the burden of responsibility to ensure that compliance is active and compliance is full with regards to that burden. I spoke earlier with Herman Wang at S&P Global Platts. He says this is going to be a big issue up for deliberation today.
There is some kind of deal. The headline number of 500,000 barrels per day that they're going to add to their 1.2 million barrels per day cut. But, of course, we need to look at the fine print. And they were kind of tight-lipped about it as they left the Secretariat. No one really kind of giving any details about who's going to cut what. And we know that, as you said, it was a very contentious meeting, very acrimonious. At some point, delegations walking out of the meeting and having been called back to the table to try and get them back on side.
Herman Wang speaking to me earlier. The other thing to look at here is exactly how this deal is going to get over the line. Clearly, there's a lot of differences between a number of producers, but the key is Saudi Arabia and Russia. It does look like perhaps the Saudis have been able to get the Russians on side with this cut. The Russians, of course, being initially reluctant to cut production further by excluding condensates. And by so doing, it does appear that at least for the Russians, this is going to be more of a symbolic cut than anything else. So that helps to bring them back to the table, that helps to ensure that this will go ahead. Now, what the final figure actually looks like at this point remains to be seen. We are going to find out in the coming hours, though, and of course, all eyes on exactly what His Royal Highness will say, the new Saudi Energy Minister, when he addresses the market for the first time at the conclusion of this OPEC meeting. It does seem like oil is really looking for a catalyst right now. The big question, is he going to be able to provide it? Back over to you.
Dan, thank you very much for the comprehensive report and what has been a very fast 24 hours. In other news, Boris Johnson and Jeremy Corbyn go head-to-head in another televised debate this evening as next week's UK election edges closer. The pound has hit a 2.5-year high against the euro after recent polls appear to put the Conservative Party on course for an outright majority. Brexit is, of course, front and centre for the vote, but climate change is also one of the biggest issues on the ballot. Britain held its first climate-focused election debate, which was attended by leaders from most of the country's major parties. However, Boris Johnson and Nigel Farage were notable absentees. Amelia Womack joins us, Deputy Leader, Green Party. Amelia, welcome. Nice to see you.
Thank you.
Just want to remind the audience about some of the key pledges for your party. This is around reducing carbon emissions, funding for the NHS and opposing Brexit. I just want to pick up on the Brexit conversation because we've been talking all week that this is meant to be an election in some ways around Brexit, and that's what the Conservatives want. But how is the Remain tactical voting going, and what do you make of the campaign for that so far?
So I think that this election has been about Brexit. It's also been about the environment, as you pointed out. And I think that what's changed on the doorstep is people have made their decisions based on Remain or Leave. I think there are lots of people who feel like one of their priorities will be Brexit, but people are looking at other priorities in other sections, and things like the environment are coming out as people's top priority. That's what politics is all about. It's all about making sure people vote for their priorities to get the change they want to see. And that the climate debate, rising issues around climate change and environmental destruction has got higher and higher on people's priority list as the election's gone on, as well as issues like the NHS, reversing cuts and other areas.
Lots of issues on the table, but just purely around Brexit, it feels as though it's almost easier to see a pathway for Boris Johnson with the Brexit Party deciding not to stand candidates in certain Tory seats. That's sort of a clear path and a clear way to think about Brexit. But on the Remain side, it's very hard to know how those who want to oppose Brexit put forward that vote come polling day on the 12th of December. And that's a challenge, isn't it, for your side?
So we actually worked with other parties like Plaid Cymru and the Liberal Democrats to stand aside in a number of seats across the country so that we'd be able to have that strong Remain vote. We wanted to work with the Labour Party as well, but it was the Liberal Democrats and Plaid that put that deal forward. And I think that what's really important is that people do want to see political parties working together, that grown-up form of politics, so that we can talk about these big issues and talk about what we have in common rather than just about our differences. And to me, I think that obviously the Green vote is the strongest Remain vote, as we've been clear that we want to stay in the European Union, but we want a people's vote to make sure that people have a final say on that deal on the table.
Is that actually true? I look at the treatment that Jo Swinson has received as she's been on the hustings, and she is being pilloried over and over again for cooperating with the Tory party, the deal the Lib Dems did effectively to be in government. And policy after policy she's being hauled up on. And they're saying, well, frankly, you went against your own party's agenda by signing up to this deal with the Tories. Isn't the risk that your message gets lost by agreeing to involve yourself in this electoral strategy, that people will go, well, the Greens used to stand for the environment and policies to do with the environment. Now they've somehow got mixed up in Welsh nationalism.
So we've been very clear that although we've got this one point in common, we also have many differences, and we do not agree with Liberal Democrats and Plaid Cymru on every single aspect. And being Welsh myself, I feel like it is important to be talking about the future of Wales in these bigger, in the general election as well, because I think it is important that we have the interests of Wales and the Welsh people on the agenda. But I think that in terms of their voting record, I think that as Greens, we would never go into coalition. We actually don't believe in the whipping system, which is where one party will say how everyone should vote. So we would never go into coalition because we fundamentally don't agree in those principles. And I think that when I don't want to defend the Liberal Democrats because their voting record during that period did, I feel, let down many parts of the country, their voters, young people especially, I feel, it's taken to this day that trust that young people have towards the Liberal Democrats is never formed again as a result of being failed on tuition fees. And I think that that's why it's important that we're talking about this ahead of the election, because we'd be working on a supply and a basis inside any parliamentary discussion rather than being in coalition.
Has your message been outflanked by the actions of Extinction Rebellion, who have become quite noisy, I guess, and have drawn the public's attention to these issues, but have done it in such a way that's been outside of the kind of political process that you're pursuing? They've also irritated a lot of the public through the actions that they've engaged in. There are, it seems to me, a couple of risks here for the way people think about the Green Party and how they put their cross in the box on the 12th.
I mean, I think that to begin with, Extinction Rebellion are trying to lobby all parties to meet their demands. And I know that as Greens, we support some of their ideas, but we don't support all of their actions. And I think that what's important is these are ordinary people who have just felt that they've voted for action, they've lobbied and petitioned for action. And I see people that have never got involved in demonstrations before going out and trying to get heard. And I think that in terms of what that means for the environmental agenda, I think it just shows that there's a rising concern of a need for immediate action. And as Greens, we've been championing that for the last 30 years, the need for action and to make sure that we are staying within our carbon budget. And so when we look at the action, when we look at what their demands are, I think it is vitally important that we are talking about some of these concerns. And if you want to get rid of Extinction Rebellion, putting policies in place that will be environmental policies that make sure that we stay below 1.5 degrees of warming, that respects the fact that the UN said we've got just 12 years to take action on climate change, which means putting policy in place in the next 18 months is the only way to do it.
There was some tweeting yesterday about some environmental protesters and OPEC Plus actually being on the same page for once, because everybody wants to keep the oil in the ground at this point with production cuts. But where there is coordination, it seems, between some of the messages from you, from protesters, but also business, is to try and achieve targets. So what coordination do you see with business at this point to try and achieve lower emissions, but also push forward with some fiscal spending that seems to be badly needed in economies? You've often heard, even in Germany, for instance, that one of the best ways to achieve some of this extra fiscal spending is around green initiatives at this point. So is there more coordination between your party and big business than you've seen in many years?
So I think that one of the things that businesses that I work with want to see is a level playing field to make sure that they're not being outcompeted as a result of having the strongest environmental policy. Also want to make sure that there aren't going to be changes in the support that business has in becoming more and addressing their carbon emissions and addressing their environmental impact. And I think that long-term thinking is vital for all politicians and all politics, because I think that that's been one of the ongoing frustrations of business. And that's why we are working to invest in making sure that we are creating a transition for all aspects of society, including giving grants and support to businesses to change a lot of their habits, and by also creating new opportunities in the environmental sector by having clear investment. We're looking to invest £100 billion a year to tackle the climate and ecological emergency, which will create opportunities for business across the board.
Just one last question really on the platform here. Again, the Green Party has a very clear agenda, and yet when you look at the fact that you've come up with a manifesto that covers the whole of the economy, people are scratching their head and saying, well, why is the Green Party talking about student debt and forgiving student debt at this point? Or why are you talking about spending another $6 billion on the NHS? You have an agenda that's a green agenda. Why confuse the electorate by focusing on these other social issues, which actually then give the Green Party a different political texture?
So our priorities have always been social, environmental and economic justice. And if you're going to build, if you're going to work in policy, you need to take into account all of those aspects. As you've already said, it's business that are looking for a green agenda as well. And I think when we're talking about every single part of this is tied up together, we aren't just talking about the environment environment as the Green Party. We have never just talked about the environment, but and that's why we've got every single aspect in our manifesto. In fact, when we create these complete packages, it means that we've got interconnected policy that takes into account all of how those aspects work together. And when you're looking at things like the NHS, it's so vital that we're talking about prevention from as well as cure with some of the issues that people go into the NHS with. Tackling things like air pollution, which you might see as a typically green issue, is also a health issue. And I think it's important that we acknowledge all of those different places where environmental issues, social issues, and economic issues all connect together.
Amelia, thank you for stopping in to see us and making time for us. I know it's probably a very busy run-up to the election for you, so thank you very much. Amelia Womack with us, Deputy Leader, Green Party, and Jerry Fowler staying with us, our guest host. Coming up on the show, back from the brink, Germany's Grand Coalition gets another shot after Angela Merkel's junior partner makes a U-turn. We're live from Frankfurt next.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera, now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile, every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Forget the cheese, basket, and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline, into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the Van Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Germany's Social Democratic Party begins its three-day Congress in Berlin today. Norbert Walter Bojans and Saskia Esken are set to be sworn in as the party's new leaders after they upset the odds to win last weekend's leadership vote. But it's unlikely the pair will pull the plug on Germany's government just yet, despite campaigning as critics of the SPD's junior role in the Grand Coalition. Let's get out to Annetta for more. Annetta, markets were a little bit concerned that we might see an end to a Grand Coalition after some of the reporting in recent weeks, but that seems to be not the case as we come up to this Congress. So can I ask you about spending, whether the SPD can move the needle on the coalition's spending pledges?
Well, that
that could actually be one area where they could bring the ball home, so to say, if the Social Democrats or the Christian Democrats, the government, would say, okay, as a concession to some of their demands, they would up the spending plan of the finance ministry. But, well, having said that, it's highly unlikely that the CDU is actually saying yes to reopening that coalition contract, at least for now. The rhetoric out of Berlin is the coalition contract is what it is. There is some interpretation leeway in that contract. So, meaning probably one could move a bit more towards more spending in certain areas the SPD thinks is important, but to kind of boost the overall spending, it's highly unlikely that this is going to happen. Also, any deviation from the so-called black zero, that mantra of a balanced budget, it's not going to happen with Angela Merkel's CDU in government. So I guess any hopes from that side are more of a speculation and not very likely. So what's going to happen over the next 3 days? That's actually a big question mark, even though we're going to see backpedaling from the SPD now that there's no vote on the Grand Coalition as such. The left wing of the SPD wants to have a forced vote on exactly that issue, because that was the clear cornerstone of the campaign of the duo which won that leadership contest. So I guess it will be an exciting time today and tomorrow in Berlin at that convention, and we'll watch that closely. Back to you.
Terrific. Annette, thank you very much indeed for that. Annette with us out of Frankfurt on this critical SPD meeting. Let's just refocus on what the big story for markets will likely be this morning. US non-farm payrolls forecast to grow by 187,000 in November. According to Dow Jones, the data is expected to receive a boost from the return of striking GM workers. The unemployment rate set to remain steady at 3.6%, while average hourly earnings are predicted to rise 0.3% on the month. Jerry, Karen and I were talking earlier about some of the challenges around just finding the workers for the US at the moment here. The average hourly earnings rate has been ticking up modestly. What do you think we need to see in the data today just to feel comfortable about the trend running into the beginning of next year?
Yeah, so I think the whisper number would be lower than, in fact, I think it was reported this morning that it was probably lower than 187 because of the GM influence that might occur. I mean, 187 would still be a very robust growth environment. But, you know, I would imagine that as long as that is still north of 100 at least, probably, you know, 150 preferably, the market will be pretty comfortable. The US outlook remains really quite healthy, rather than the concern that, like we saw in the services PMI, that there is this ongoing slowdown that may start feeding from the industrial sector into the consumer sector, because that would be a big problem for the narrative that growth is troughing and perhaps rebounding next year. We need to see services maintained.
It does feel as though this data series is the one to watch, but it's hard to get excited about jobs and the Fed at this point. It feels like we're just in a wait and see mode. So when do we need to have the Fed on our radar as another pivotal moment for markets?
Yeah, I mean, some of the banks are talking about that being as soon as January, and that's basically because their view is that the data decline, the hard data decline has slowed, but actually it won't trough. It's just going down at a slower rate. If that's the case, then the Fed might need to, you know, be not necessarily live in January, but certainly is talking about what extra stimulus they might need to add throughout the year. So we just have to see. It might well be well into next year before we start seeing you know, this troughing evidence, and whether it is a rebound or simply a pause in a longer decline.
Just as we wrap up, we talked a bit about the UK election. How do you position for next week?
Well, we have a few positions. We are long the domestic equities in the UK because we expect that the Brexit will no longer be a no-deal Brexit, and therefore there's a heavy discount that can recover. They've already been doing quite well. The other very popular position is short inflation because the rising pound and some economic recovery might actually bring those inflation expectations down.
Jerry, great having you on the programme. Thanks very much for being with us this morning. Jerry Fowler, Investment Director at Aberdeen Standard Investments, and thank you for your company for the week. That's Squawk Box. Stay with the channel. Street Signs up next.
There's one show that every CEO and every decision maker knows.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Bah humbug. Even Scrooge appreciates the value of TuneIn Premium. Give the gift of endless audio to your friends and family. Ho, ho, ho. Search Premium to upgrade today.
To LeBron, slam dunk.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Kawhi Leonard and the Clippers are in Milwaukee to take on Giannis and the Bucks.
Hard pulls back, trying to make it 11-2.
Kawhi Leonard is all over the place.
Today, the Clippers are at the Milwaukee Bucks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn. MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Happy Friday. Welcome to Street Signs. I'm Shimanda Versace.
And I'm Willem Marks. We're both in London, but here are your headlines.
Our top story today, bearing the burden. OPEC and its allies gear up to endorse a 500,000 barrel a day production cut as day 2 of the OPEC meeting gets underway here in Vienna.
Saudi Aramco shares price at the top end of the range as the oil giant raises a record $25.6 billion. And the world's largest ever IPO, but the valuation falls short of the kingdom's $2 trillion target.
And positive signs of a trade deal boost market optimism at the open as President Trump says talks are moving along well, and Beijing says it will waive tariffs for some U.S. agricultural products.
Reassuring. Swiss Re shares rise as the company says it will sell its British unit to the UK's Phoenix Group in a deal worth £3.2 billion. Well, it's the last trading day of the week, and you can see right behind me there's a lot of green already on the European heat map. And this after a more positive handover from Wall Street. We had marginal gains out of the 3 Wall Street majors, some optimism yet again about those trade talks, new comments out of President Trump saying that the trade negotiations are on track and are going well. So that gave somewhat of a boost to Wall Street indices yesterday and trading. And overnight as well, we are seeing some more positive momentum with Asian equities. And here on some reports from the Chinese Finance Ministry, that China are willing to make exemptions on some U.S. soybeans and pork imports. So the narrative about trade in the last 24 hours has switched to positive again. And you can see that in Europe as well, we've still got a lot of green on the board on the last trading session of the week. Stock 600 up about 0.3 percentage point. Surprisingly, the Stock 600, despite the red that we saw in Asian markets and Wall Street this week, it has been a heavy week for global markets. The Stocks Europe 600 has done relatively well this week. So today, also a case in point, up 0.3 percentage point. Switching to individual bourses, though, let's get into some of the individual countries. FTSE 100, again, having a positive session today after a couple of days of negative territory, up 0.6% this morning. Worth bearing in mind that tonight will be the last opportunity for a debate between the Prime Minister Boris Johnson and opposition leader Jeremy Corbyn. So all eyes on that this evening ahead of the December 12th general election. People have been watching the polls very, very closely to see whether or not the Tory lead will compress over the next couple of weeks. So certainly something to keep an eye on from a political standpoint. Xetra DAX in Germany, we're just above 13,000 now, about 0.25 percentage point firmer on the day. We also had some weak macro data yet again out of Germany this morning. Industrial production numbers weaker to the tune of 4.3% year on year. And this after weak factory orders yesterday. So while the index is doing well today, I would just remind viewers that the macro isn't so positive. We did have some weak industrial production numbers there. And then CAC 40 in France up about 0.5 percentage point. Also here, keep an eye on the political background. We had huge demonstrations across Paris, across metropolitan cities yesterday, about 800,000 people on the streets. A transport strike in protest over proposed pension reforms out of the government. So the index is brushing some of that news off. It is trading up in the green, but of course the political sentiment one to watch very closely. Now let's talk about individual sectors, though. I did say the handover from Asia was quite positive this morning. So some of the trade sensitive sectors are doing quite well. We've got tech up about 0.75 percentage points in line with some of the moves we had in the U.S. session yesterday. Basic resources also tend to do well on days when China rebounds. And then construction and material actually up 0.5 percentage point. Construction material in Europe happens to be the best performing index in all of European sectors this year. Year to date, construction material is actually up north of 32 percentage points. Who would have thought in a year where we spent so much time discussing the European recovery that construction material, very cyclical sector, would be the best performing sector. On the downside, we've got telcos down about 0.1 percentage point. Defensives here, healthcare also trading just shy of the flat line. So definitely a more positive start to the day. And remember, all eyes will be on those U.S. non-farm payroll numbers coming out in the afternoon. Expected to see an increase in the headline number from what we had last month. And also, investors will be watching those average hourly earnings very closely as well. Expected to come in at about 3% year on year. Willem.
Well, Reuters has reported that OPEC members will carry out the lion's share of fresh oil supply cuts if the cartel endorses a reduction of 500,000 barrels a day. The news agency reports that the group will shoulder 2/3 of the burden from the deeper supply cuts, while non-OPEC members will be responsible for the remaining third. If you look at Brent there, it's trading very slightly higher this morning, and a similar picture for WTI crude is up at $58.43 a barrel as of right now. I'm happy to say that Dan Murphy joins us from the OPEC meeting in Vienna. Dan, looks like you're staying a bit warmer today. What's it taken, though, to get to this point over the last 24 hours?
Well, Villain, it certainly has taken a lot. And as we just pointed out, the price of crude trading mostly flat this morning. That means that this meeting is going to be a real catalyst for the markets. It gets underway in just a short while. And certainly this OPEC meeting has also been turned on its head. Throughout the course of the week, we've been discussing how ministers here are likely to extend the overall production deal. Then enter the Iraqi oil minister, who suggested that a 400,000 barrel cut could be necessary. Overnight, the OPEC meeting, day one, ending with a lot of contention, the final press conference being cancelled, some ministers even walking out of the room before the meeting was finished. But at the washout, the decision now is perhaps a cut that would see 500,000 barrels of oil coming off the market. Now, whether or not that really remains to be seen, but clearly this could have a significant impact on the oil market moving forward. Wanted to bring in our next guest now. Very pleased to say that David Fife is here. He's the chief economist at Argus Media. He's going to weigh in on this 500,000 barrel figure. David, good morning to you. First of all, do you think that at 500,000 barrels, is OPEC cutting too much too soon, given the market fundamentals right now?
I think the actual level of 500,000 barrels per day probably isn't a bad number. Our view of the market next year was that it's slightly oversupplied.
That's David Fyfe there. He's the chief economist at Argus Media. Guys, we'll toss it back over to you. As I pointed out just before, we are expecting ministers to arrive in the next few minutes, so we'll try and grab them on the way in, bring you some more analysis, some more commentary as day 2 of this OPEC meeting gets underway.
Dan, we wish you luck with that endeavour. Thanks so much for that interview. Well, Swiss Re has agreed to sell its British insurance unit Reassure to the Phoenix Group for £3.2 billion. Phoenix is Europe's largest owner of life assurance funds.
And if that's not exciting enough, coming up on the show, another twist in the trade saga between the US and China. All the details coming up in just a few moments.
A moth without hope struggles in the spider's web.
Imagine giving the perfect gift to someone you love. A thoughtful, timely Prezi. A new coat, perhaps. Well, the Black Tag event is now on at Carphone Warehouse. Get the Samsung Galaxy A20e just £29 a month with 9 gig of data, and it comes with a Nintendo Switch Lite. Or switch that phone and keep one for yourself. Carphone Warehouse. Select 24-month contracts. T's and C's apply, subject to availability while stocks last. See website for details.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
At Asda, we know everyone has their favourite chockies, which is why these great brands are at the very sweet price of just £3 each, including pouches of Toblerone, Celebrations, Quality Street and Roses. Asda, let's make Christmas extra special. Selected stores online subject to availability. Pouches 340 grams to 450 grams.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Welcome back to Street Signs. Well, the US trade deficit in October was the narrowest in almost 1.5 years. Data shows that it fell to $47.2 billion last month after a decline in both imports and exports. The deficit with China, well, that fell 1.1% to stand at a little more than $31 billion.
Meanwhile, on everyone's favorite topic, more mixed messages on a trade deal. President Trump struck an upbeat tone on negotiations and said talks are, quote, moving along very well. But China continues to insist that tariffs on Chinese products must be lifted as part of any preliminary of Phase 1 deal. The Finance Ministry in Beijing has also said separately that it is prepared to waive tariffs on some American soybean and pork imports in response to requests from U.S. firms to do so. Now, our colleague Eunice Yoon has more details from the Chinese capital.
China's extending an olive branch to the Trump administration for the trade talks. The customs authorities here said that Beijing would waive tariffs for some U.S. soybean and pork imports. A range of products would be exempt, though it didn't detail which ones. China had imposed 25% tariffs on U.S. soybeans and pork as countermeasures to President Trump's tariffs. The Trump administration will likely welcome this move. President Trump has been demanding that China buy more U.S. agricultural products. The Wall Street Journal is reporting that President Trump wants Chinese purchases of 40 to 50 billion a year. The U.S. is also demanding that China publicly announce the purchase plan and to say that they won't depend on market conditions or China's trade obligations. That would be difficult for Beijing, which reiterated again today that Chinese companies import based on market needs, a reminder of one of China's bottom lines. Eunice Yoon, CNBC Business News, Beijing.
Well, certainly expectations about the trade war have been moving markets, but we also have been listening to some commentary the last couple of days vis-a-vis digital taxation. You may recall just a couple of days ago when the president was in London for the NATO meeting, the day before they had proposed tariffs on France on back of the proposed digital tax put forward by France. We're just hearing now from the French finance minister, Bruno Le Maire, who's saying that France and its OECD partners will reject the U.S. proposal for an optional approach to international tax reform. I think what he's saying in between the lines there is that it is not optional. He calls on the United States to negotiate an international tax reform in good faith, which means not an optional basis. And then finally, Bruno Le Maire says Europe should resume negotiations for an EU digital tax, even if talks at the OECD fail. So this was a compromise that they were trying to reach at an OECD level.
And it was interesting, wasn't it? We saw that note from Angel Gurria talking about luring Steve Mnuchin to Paris for conversations with Bruno Le Maire. And this seems to indicate that potentially those talks between now and Christmas looking a little less likely.
And indeed, just another front on this trade war when it comes to Europe as well with the U.S. But let's bring it back to the original front, which is China-U.S. I want to bring in Emma Wall, the head of investment analysis from Hargreaves Lansdowne, who joins us from Bristol. Emma, good morning to you. Let's bring it back to the prospects of phase one trade deal. Likely, unlikely, the ping pong continues. And of course, that December 15th tariff deadline is just 1 week away at this point. How much really investor optimism do you think there is surrounding this deal, given the conflicting news that we've had in the last week?
I mean, it's yet another week, yet another roller coaster ride in Trump's trade rhetoric. I mean, we only have to go back a couple of days, and it was a sea of red across global markets as Trump announced he was going to be taxing France and that there would be no resolution to the trade war with China for at least another 12 months, even post-US election. Today, things are looking more sanguine. I think in terms of investor impact, it's really interesting where in the world you are. Certainly in the West, a lot more emphasis seems to be put on Trump's rhetoric. It's much more of an understanding when we talk to our own investors here in the UK and across Europe that actually it's Asia that feels the brunt of this. And I was in Asia in October, and actually they have the opposite feeling. They say actually they'll be absolutely fine. There's far more drivers of growth there in Asia and of stock markets, incredibly supportive demographics for one. And actually they say that Trump is only hurting himself with this continued rhetoric.
And yet, there seems to be a very high correlation between global growth numbers and global trade. We continue to see trade volumes fall off a cliff this year. Global growth indeed getting impacted as well, and we see that in the manufacturing numbers. But there's also a big disparity between what's been happening on the growth side of things and asset classes. You have major stock indices up north of 20% this year. Can that continue into 2020 if the growth backdrop isn't supportive?
I think you're right. You know, if we have a look over historically, the correlation between global trade and global growth, going back a few years, you can see both completely drop off. And there have been warnings in the last 24 hours, indeed from the IMF, about the impact of continued trade wars and what that will do to the global economy. In the past, or Investing 101, we always say the stock market is not economics, but actually increasingly there is a correlation between those two as well. You only have to look at the last 3 months of last year, where we saw increased concerns about recession, global markets across the board fell, and indeed asset classes, even oil prices fell. Remember, we bottomed out on Christmas Day last year. So increasingly, the three things do go hand in hand: trade, economic growth, and stock markets. And at the very least, if they don't all fall together, they do have increased volatility together.
Emma, can I add another leg to that stool you've kind of outlined there? And it's the idea around the US consumer being so resilient over the last 12 months. With all of these trade wars, potential trade wars, trade salvos from the US administration, what do you think it would take for that consumer confidence in the US to start to drop?
Well, we saw the deficit fall in the US, and part of that was down to weaker import, which potentially suggests there is a weaker US consumer. However, oh, sorry, can you hear me? The sound's just gone from my ear.
Yeah. No, Emma, we've still got you.
However, it's a bit conflicted, basically. We had Walmart coming out last month saying the US consumer is extremely strong. Although we're expecting US jobs figures to be a little weaker today, the unemployment rate is still extremely low. But there are just signs at the edges that the US consumer is a little less confident and that sentiment may be drifting, although from a pretty solid base.
Emma, here in the UK, we've had months, you could argue years of uncertainty. We've seen the impact that's had on consumer confidence. We've seen the impact that's had on investor and business decision-making. And I'm just wondering, now this week, we've had Moody's downgrade the British banking sector. For those banks that are more domestically exposed, do you think there's the potential for a very quick bounce back in their prospects if Brexit's resolved, or is this much more about a low rate interest rate environment?
I think when you're looking at the valuations of UK banks, particularly domestically focused UK banks, it's very difficult to separate recovery from the last global financial crisis versus Brexit impact. Certainly when Moody's announced earlier this week that the outlook for UK banks was weaker and they downgraded it, that we did see a drop in share prices. Share prices of UK banks have been higher over the last couple of years, but still on historic levels, considerably further below than where they were in sort of 2006, 2007. Dividends have not quite recovered to where they were before the global financial crisis. So although banks have recovered, I think you're right to say there is further to go. I thought the timing of what Moody's was saying was quite interesting, seeing as there is potential for resolution around the corner with Brexit. But I think it just reflects that ongoing sort of almost paralysis in the UK banking sector, and indeed across UK PLC, because of Brexit and because of this sort of political uncertainty.
And Emma, just asking you about another sector that's also got hit recently in the UK, that is the property sector. And of course, just a couple of days ago, we heard of the M&G property fund, £2.5 billion being suspended. This on the heels of other property funds coming under pressure as well. What is your outlook here? And is it mostly Brexit related, what's going on?
I think it's important when we're talking about property to clarify the difference between residential and commercial. So the fund that did gate on Wednesday was a commercial property fund. The reasons that M&G gave behind that gating were to do with the exposure to the retail sector, where they have seen considerable headwinds, both because of sort of structural changes within the retail sector. I mean, we only have to say the word Amazon, and bricks and mortar retail is kind of quake in their boots, but also because there has been less footfall because of Brexit uncertainty. People just aren't spending as much in the UK at the moment because they don't know what's to come next.
All right, Emma, we'll leave it there. Certainly a lot of uncertainty. That's one thing that we know for sure looking ahead. Emma Welby, Head of Investment Analysis from Hargreaves Lansdown. Thank you for your time today.
Well, let's stick here in Europe, because in Berlin today, Germany's Social Democratic Party begins its three-day Congress. Norbert Walter-Borjans and Saskia Esken are set to be sworn in as the party's new leaders. They unexpectedly beat out other rivals during last weekend's leadership vote. Our colleague Annette Weisbach joins us from Frankfurt this morning. So, Annette, what could we see happen over the course of this weekend when it comes to the Große Koalition?
Well, actually, it's getting more unlikely that they call off the Grand Coalition, but it's a remote chance. We should actually focus on that party meeting quite vigilantly, because the party left is still insisting on having a vote on whether or not to stay in the Grand Coalition, and it's exactly that left wing of the SPD which voted the two new leaders in. So essentially, there's a lot of disgruntlement inside the Social Democrats currently, because clearly they feel cheated because the central focus point of the campaign of the two new leaders was to actually question the existence of the Grand Coalition and have a vote on it during that party convention. So the backpedaling now will probably not go down too well with the SPD delegates on the ground in Berlin. The convention is just starting now, and we hear during the course of today what is going to really happen at that party convention. One thing is clear, the two new leaders will bring the SPD a tad more to the left. Whether that already means that we get more spending, something which international investors are most interested in, that's highly questionable. The CDU and the government already stepped out saying, well, we are not going to reopen that coalition contract to have the special needs of the SPD addressed. But what we can do actually is to look inside the coalition contract, whether there is some leeway, some room for interpretation that we can address those issues from the Social Democrats. But clearly, if they are insisting on reopening that contract, we could see the CDU actually force them to leave the Grand Coalition. So that option is not completely off the table, but less likely, as I was saying before. With that, back to you.
Annette, thank you so much. Annette Weiss back there, live in Frankfurt.
Well, stay with us, because coming up on the show, Saudi Aramco's IPO becomes the world's largest ever listing, but the valuation falls short of the kingdom's target. We'll explain why in just a few moments.
Do you have concerns about mild memory loss related to aging?
Get your home ready for Christmas. At littlewoods.com, you can order selected sofas, beds, and dining room furniture now and get them delivered in time for Christmas. Perfect for welcoming all of your guests. All with inclusive delivery and free returns. Own Christmas. Shop now at littlewoods.com. Order by 19th of December.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Mate, this fan's suspension is rubbish.
Tell me about it.
Even the radio's had it.
I know, but I'd get nothing if I scrapped it.
Actually, you can get at least £2,000 off a new Ford for it.
You're kidding.
With Ford's new for old scrappage scheme, you can get between £2,000 and £6,250 off a new Ford van if you scrap an eligible vehicle with us responsibly. Also, there's 0% APR representative on Ford Acquire. Ford Commercial Vehicles. Backbone of Britain. Search Ford Scrappage. Exclusions apply. Contract and register by 31st of December 2019 at participating dealers. Agent ownership criteria apply to scrappage vehicle. Subject to status. Free post full credit. Deposit restrictions apply.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 podcasts, season 6. Listen now to 30 for 30 podcasts on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to Street Signs. I'm Willem Marks.
And I'm Jemima Versace, and these are your headlines.
Bearing and sharing the burden. OPEC and its allies gear up to endorse a 500,000 barrel a day supply cut amid new reports that the cartel will shoulder most of the reductions.
Saudi Aramco shares price at the top end of the range as the oil giant raises a record $25.6 billion in the world's largest ever IPO. But the valuation falls short of the kingdom's $2 trillion target.
Signs of a positive trade deal boost market optimism as Beijing says it will waive tariffs for some of Washington's agricultural products, and investors wait for today's U.S. jobs report.
The House moves to file articles of impeachment against President Trump as Speaker Nancy Pelosi accuses him of abuse of power.
Our democracy is what is at stake. The president leaves us no choice but to act because he is trying to corrupt, once again, the election for his own benefit.
Well, we're seeing a more positive session for European equities last trading day of the week. All of them behind me you can see trading nicely up in positive territory. The handover from Wall Street marginally positive, and indeed the handover from Asian equities also quite positive as well. More optimism around the potential of the phase one trade deal, and indeed President Trump is saying that the negotiations are going well. So that set the tone. We've got FTSE 100 here in the UK up 50 points today, about 0.8 of a percentage point higher. So we are paring back some of the losses that index had earlier on in the week. It's been a very heavy week for the FTSE 100, not least because the pound is doing so well. We'll talk about that in just a moment. Xetra DAX in Germany up 0.3 of a percentage point, and here we are seeing a bit of a rebound today in some of the industrials on back of the better sentiment out of China overnight as well. Worth mentioning as well that we had industrial production numbers come out this morning on the weak side. So the manufacturing picture for Germany still somewhat on the weak side. CAC 40 up 0.5 of a percentage point, shrugging off some of the political developments there. The metropolitan cities in France have been set back by now. This would be the second day of a public transport strike. Up to 800,000 people are on the streets demonstrating. Hasn't really affected the index so much, but of course certainly something to watch out for. FTSE MIB in Italy also up about 0.3 of a percentage point. The banks are having a better start to the day today. Switching to currencies, and actually the theme over the last couple of days has been the weakness of US dollar, and we're seeing it versus euro. We're actually nicely above the 111 mark now. We had been closer to 110 earlier on in the week, but with the weakness of the US dollar, we've seen a rebound in euros. So I would say that what's happening here is more of a function of the greenback rather than what we're seeing on the euro side of the equation. Dollar yen, we're seeing a bid for yen overnight to the tune of about a tenth of a percentage point to the safe haven currency. Cable, we have trading slightly on the back foot, a quarter of a percentage point weaker today, but still 131.20. We've moved a lot in the last couple of days, and here this all eyes will be on those polling into the polls into December 12th general election. Tories still have a majority. The question is whether they can hold on to that majority. Big questions to be answered in the next week or so. And then dollar Swiss franc, we have the francs trading slightly weaker versus the dollar. Bear in mind we also have SNB and ECB meetings next week to watch out for as well. Switching to U.S. futures, we've got a big day-to-day coming up. Non-farm payrolls later to watch out for. Expectations are about 187,000 on the headline print, and at 3% when it comes to average hourly earnings year on year. And investors will be watching that very closely. But in terms of futures, we've got all of the three indices looking like they're going to open up in the green. Dow up about 70 points and NASDAQ up about 27 points as well.
Well, it's the world's biggest or largest IPO. Saudi Aramco will raise $25.6 billion, more than Alibaba did in its initial listing. The oil giant priced each share at 32 rials. That's around $8.50, and that was at the top end of its range. It means Aramco is now more valuable than Apple, with a market capitalization of $1.7 trillion. Happy to say that our colleagues Dan Murphy and Hadley Gamble join us now from outside that OPEC meeting in Vienna. Guys.
Hey, Willem. As much as we love talking about that Aramco IPO, I want to quickly discuss what we're doing right here on the sidelines of this OPEC conference. Now, in 30 minutes, we're expected to begin seeing at least the arrivals of these OPEC and OPEC Plus ministers arriving here for these meetings to commence. Now, just a bit of background here. We are talking about cuts potentially of 500,000 plus barrels per day. As you can see, we're always seeing these ministers arriving. But I got to tell you, sources close to this meeting have essentially said to me, listen, in theory, there's already a deal in terms of what needs to be cut. What is going to happen later today is finalizing that with the OPEC Plus members. And we're talking mainly about Russia, aren't we?
Yeah, absolutely. So your source is now saying that this deal is coming together. It'll be interesting to see how these cuts are going to be divided among the group. It does seem like some sort of deal had to be agreed to when it comes to getting the Russians on side. It does also look likely that by excluding condensates, the Russians are on board with this cut, and that's hugely significant because obviously this alliance is crucial for the overall deal to be able to go ahead.
Absolutely, and I think that this does speak, to the leadership of the current Saudi oil minister, because remember, Khalid, the former minister from Saudi Arabia, was really at the forefront of getting the Russians on board for this OPEC Plus agreement in the first place. They were able to keep them over the last couple of years and really, frankly, allowing them in many ways kind of to cheat on that agreement, just to keep them within the fold. And it's seemingly as if His Royal Highness Prince Abdulaziz, the Saudi energy minister, has come to the table in the last 24 hours and said we need to cut back on the cheating, we need to bring people to the table, and we have to make significant cuts. And of course, all of that against the backdrop, of course, of the pricing of the Aramco IPO.
Absolutely, and all eyes on what His Royal Highness says today and how he addresses the group at the closing of his first OPEC meeting. Now, you mentioned the Aramco IPO. Obviously, this has also been looming large over the meeting as well. There was a suggestion that the Saudis would like to see higher oil prices in order to guarantee the successful float of that company, and it does look like they will be able to get that. The big question is, though, how are investors going to react to the public float of Aramco now that we have the pricing at the top end of the range? Because certainly there's a lot of pressure on Aramco now to
see the Nigerian
ensure that this is a success.
The OPEC
there
meeting.
he is, yeah.
The arrivals are already beginning, so a lot more to come, you guys, for the rest of the day. We're going to be bringing it all to you live, including, we got to head in there now, but including an interview with His Royal Highness Prince Abdulaziz, the Saudi energy minister, exclusively later today on CNBC.
Guys, we'll leave it there. Thanks so much, Dan. Thanks so much, Hadley. Get inside and chase those guys down.
Now, meanwhile, Japan's government has approved a $120 billion stimulus package in an effort to avoid a recession as some aspects of the global economy continue to slow. It is the largest stimulus program that Tokyo has announced for 3 years. Japanese exports are a key driver of the economy and have fallen in recent months because of the U.S.-China trade war. Now, HSBC's Max Kettner and Aberdeen Standard's Jerry Fowler gave their take on the Japanese economy earlier this morning.
If you look at Japan, why would you be so pessimistic? Why would you say, look, if we're now ticking along, we've seen the trough in PMIs, right? We've sort of seen peak in recession fears. It probably doesn't make much sense to say, okay, yen's going to price in another recession fear kind of scenario.
Japan, pretty much 100% of the profits of the Japanese market come from exports. That's not to say there aren't some profits in some areas in the domestic economy, but on average, the domestic economy does not produce profits for Japanese companies.
All right, let's broaden out the conversation with Eric Stein, the co-director of Global Income and Portfolio Manager at Eaton Vance. Thanks for coming on the show today.
Thanks for having me.
Starting with Japan and this fiscal stimulus that was announced by the Prime Minister yesterday, it feels like it's flying a little bit under the radar, even though it is a substantial fiscal easing package, and certainly one of the major countries in the G7 to actually come out with a package of this magnitude. Nikkei today is only up about 1/4 percentage point. Why do you think globally the deal has not captured more attention? Why are investors not buying into the story more?
Yeah, so I certainly think globally it's a big theme that I like. I think we're going to have more fiscal stimulus, particularly in Europe. It's harder in the U.S. In Japan, I think there may just be investor fatigue. There's been so much talk of fiscal stimulus. Japan's a country where every year they do a supplementary budget, and in my view, they have this obsession with the VAT tax and raising that tax, which to me is crazy, given Japan's demographics and given Japan's economy.
And of course, this, to some extent, the new fiscal package offsets the impact and the tightening that we're going to see from the consumption tax.
Exactly.
How do you think about Japan, though, as an investment play? Because certainly the valuation is there.
Yeah, so, we at Eaton Vance, we like Japanese equities. We used to be short the currency. We actually like to be long the currency right now. So, I believe Japan's actually a better story than most investors think. There's a pretty good corporate governance reform story going on. If you look at GDP growth per capita, it's pretty good. And even on demographics, an issue where Japan's been very challenged, and immigration, obviously demographics are still challenging, but on immigration, they're having more immigration in Japan. It's not perfect, but directionally there's been a lot of change. So, Japan is a country I think that investors sometimes underappreciate the good things that are going on there.
So we talked there about fiscal stimulus. Can I just move to monetary policy over there? How do you think the policymakers in Tokyo might go about over the next couple of years trying to unwind those negative interest rates for which they were very much the leading edge?
Great question. Look, I think, one of the biggest things we're thinking about at Eaton Vance is this switch from monetary to fiscal policy, and also the problem with negative interest rates. Negative interest rates are effectively a tax on the banking system. That's what they should be called. And countries like Japan and Europe that are very bank-led for their credit markets, it's a real problem. But you're right with that question. They've set the rates at the negative rates. How do they get out of it? That's a challenge. So I think trying to steepen the yield curve, trying to transition to more fiscal and hopefully also structural policy, that's the best way to get going there in my view.
And do you think central banks, whether they're in Japan, whether they're here in Europe, have the tools outside of rate setting in order to provide the kind of accommodative environment that the slow economic growth rates require?
Another good question. Look, central banks can't be a panacea throughout we're now 10 plus years into the recovery period from the financial crisis, and I think it's shown that negative rates probably do more harm than good. I'm actually more of a fan of doing QE, maybe not with asset purchases unless you really need to, because that could distort asset markets, but just buying bonds. So I actually think what the Fed has done, they won't call it QE, but buying treasury bills, it's a stroke of genius. You're not pushing up asset markets unduly, maybe a little bit, but you're providing liquidity to markets. So if central banks provide liquidity to markets, say we're not going to raise rates that much, but we also realize there's this cost of negative rates, that's the fine balancing act that they need to walk.
Well, ultimately, I think the realization is that investors need these large balance sheets to sustain the asset price movement that we're seeing. So even though they're not, let's say, to your term, buying assets, they're buying bonds, essentially it's all the same thing because it's leading to an asset price valuation. I just want to bring it back to Europe, though, and what you think happens there, because there's been a lot of talk, and the narrative here is about ECB shifting tact. You mentioned it yourself, moving away from reliance totally on monetary policy, a bit more onus on fiscal spending next year. Are you optimistic that 2020 is going to be the year where we do see even more fiscal spending come out of Eurozone? And if so, what does that mean for bonds?
Yeah, no, another great question. Optimistic. I don't think we're all going to get it in 1 year. I do think under Christine Lagarde's leadership, she's going to be far more focused than a traditional head of a central bank on more fiscal stimulus as well as structural reforms. Just given the politics in Germany, and I know a couple minutes before on air, you guys had live from the SPD conference. I think there is the potential in Germany with the Green Party getting more power, the SPD somewhat may be breaking away from the CDU, trying to get more fiscal stimulus in Germany. I wouldn't bet on it all in 2020. It's going to take some time.
All right, we'll leave it there for now. We'll come back to you in a few minutes' time. That's Eric Stein. He's the co-director of Global Income and Portfolio Manager at Eaton Vance. Well, France is waking up to a second day of massive industrial action across the transport sector today as unions challenge the government over planned pension reforms. NBC News' Bill Neely filed this report from the French capital.
Tear gas, fire and fury in Paris as the biggest French strike in decades descended into violence. Riot police firing stun grenades at protesters. Central Paris again a battleground. Nearly 1 million marched in 40 cities. Police officers and doctors joining garbage collectors and opera singers. Public sector workers angry at pension reforms pushed by the French President Emmanuel Macron. Transport across France stopped. Schools and the Eiffel Tower closed. American tourists hit.
I feel a little bit frustrated, and I spent a lot of money.
Echoes today of the violence of last year's Yellow Vest protests. Protesters tonight threatening to cripple the country and the economy. More strikes are planned tomorrow, more protests Saturday. This is a battle of wills that could make or break the French government and its president. Bill Neely, NBC News, Paris.
Well, coming up on our program, impeachment drama intensifies as the House of Representatives moves to file articles of impeachment against President Trump. We'll have more details on that after this break.
Do you have concerns about mild memory loss related to aging?
At TUI, we can help you find the perfect family holiday. And with flights from 20 UK airports, we make getting there a whole lot easier. Book now with thousands of free kids' places, plus spread the cost and pay £0 deposit when you choose direct debit. Book online or in store with one of our travel experts. At TUI, we cross the T's, dot the I's, and put you in the middle. Offer available on selected holidays for a limited time and subject to limited availability. Booking T's and C's apply. At all protected. We can deck the halls, the lounge, the bedrooms, the whole house.
Want to get your grotto glittering? Get to B&Q. We've 20% off all indoor and outdoor Christmas lights, artificial trees, decorations and more. Bring the magic home with B&Q. Offer ends 10th of December. Subject to availability. See DIY.com.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn. 'Tis the season for lights, presents, gingerbread houses, and, most importantly, news. TuneIn has commercial-free news from MSNBC, Fox, CNN, and CNBC with TuneIn Premium.
It's an update to a story we brought you yesterday. It's the toe-to-toe battle.
Starbucks, which almost never gives out anything.
Which is also listed in Serie A, about 1 billion.
Let TuneIn spread the holiday cheer all month long. Upgrade to TuneIn Premium today. Ho, ho, ho.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Welcome back to Street Signs. History in the making. U.S. House Speaker Nancy Pelosi has instructed her fellow Democrats to draft articles of impeachment against President Trump. NBC News' Pete Alexander has this report.
House Speaker Nancy Pelosi tonight wielding the power of her office in an effort to remove the president from his.
Today, I am asking our chairman to proceed with articles of impeachment.
Pelosi echoing the words of the founding fathers, saying President Trump's alleged wrongdoing strikes at the heart of the Constitution.
Our democracy is what is at stake. The president leaves us no choice but to act because he is trying to corrupt, once again, the election for his own benefit.
3, 2, 1.
The president tonight celebrating the season while counting down the days to his likely impeachment that could come before Christmas.
It's a hoax. It's a hoax. It's a big fat hoax.
Earlier, defiantly challenging Democrats to move quickly, tweeting, "If you're going to impeach me, do it now, fast, so we can have a fair trial in the Senate, and so that our country can get back to business." Tonight, the White House is aggressively gearing up for an impeachment trial early next year in the Republican-controlled Senate, where the president and his allies are confident he would be acquitted.
The Speaker gave a speech on national television to push forward her rushed and partisan impeachment.
The president today reiterating his demand that many key Democrats be called to testify, including House Intelligence Chairman Adam Schiff and Joe Biden, who today confronted an Iowa voter who questioned his age and accused him of having sold access to the White House, claiming Biden sent his son to serve on the board of a Ukrainian energy company.
You're selling access to the president just like he was.
You're a damn liar, man. That's not true. And no one has ever said that. No one has heard that.
I see it on the TV.
You see it on the TV. No, I know you do. And by the way, that's why I'm not sedentary. Let's do push-ups together, man. Let's run. Let's do whatever you want to do.
Also bristling at a question today, Speaker Pelosi, as she was leaving a news conference, asked by a reporter whether she hates the president.
I don't hate anybody. I was raised in a Catholic house. We don't hate anybody. I pray for the president all the time. So don't mess with me when it comes to words like that.
Well, that's US politics. Here's some British politics. Jeremy Corbyn, the leader of the main opposition party here in the UK, is speaking at an event in London. He's just unveiled some documents he's not yet shared with the media, in which he talks about the details around trade between Northern Ireland and the rest of the United Kingdom. He's once again trying, it seems, to go to questions of trust involving Boris Johnson. Take a listen in.
Ask yourself, if they hid this report and the ones that I revealed last week, what else are they hiding? What else will they sell you out on? At every stage throughout this campaign, Boris Johnson has chosen to deepen divisions. His whole political strategy is to turn one side of the Brexit debate against the other. I start from a very different place. I believe a Prime Minister must talk to and listen to the whole country, because we have to bring our divided country together. And if, as a result, people accuse me of talking to both sides at once in the Brexit debate, then so be it. I'm proud to do that. Why would I only want to talk to half the country? I don't want to live in half of a country. That's why I've set out honestly how a Labour government will deal with Brexit, so we can bring our country together and get on with delivering the real change that people are crying out for. First, Labour will quickly secure a sensible deal based on the terms we've already discussed with the European Union, including a new customs union and a close single market relationship and guarantees of rights and protections. Unlike Boris Johnson's fraudulent Brexit, a deal on our terms will respect the priceless peace process in Northern Ireland and protect manufacturing and people's jobs. And then we'll put that deal to a public vote within 6 months. Those who want to leave the EU without selling out our NHS or trashing our economy will be able to vote for that. Those who want to remain in the EU will be able to vote for that. Either way, only a Labour government.
Corbyn there speaking in London. That was Jeremy Corbyn there, the Labour opposition party speaking in London. We're now back out to Vienna, where we're seeing the arrival of some of the oil ministers. It looks like the Saudi oil minister has now entered that OPEC Plus meeting. Well, obviously that's something we'll continue to watch over the course of today.
And another major data point to watch out for, U.S. non-farm payrolls are forecast to grow by 187,000 in November, this according to Dow Jones. The data is expected to receive a boost from the return of striking GM workers, General Motors. The unemployment rate is set to remain steady at 3.6%, while average hourly earnings are predicted to rise 0.3% on the month, or about 3% on the year. Eric Stein, the co-director of Global Income and Portfolio Manager at Eaton Vance, is still with us. It feels as though going into this NFP, markets are not as excited as they have been in the past. I was looking at implied vols in FX, and they're the lowest they've been ever going into an NFP meeting. Why is that the case?
Well, I think another great question for two reasons. One is just we're in a low vol, particularly low FX vol environment for a variety of reasons. The other is, I think Jay Powell has pretty clearly stated the Fed's on hold. The Fed did their 75 basis points of rate cuts this year. The bar to either cutting or raising is quite high. There's so many other things in the markets. We just went through them. U.S. politics, British politics, oil, the Aramco IPO, all of that. So markets are more focused on that than U.S. data per se.
But we've had a slew of quite underwhelming U.S. data recently. The U.S. manufacturing index, the ISM, came in disappointing. Non-manufacturing services as well. It feels as though the market is poised for a weak number today, no?
I do think certainly U.S. data has gotten weaker versus 6 months ago or 9 months ago. To me, it's broadly stabilized at a, let's call it 2% growth rate. And given that we've had a very easy financial conditions with 75 basis points of cuts, as I said before, but even more importantly, a year ago, markets were expecting 75, 100 basis points of hikes. So that's 150, 175 basis points of easing today versus where markets thought we'd be today 12, 13, 14 months ago. That's a lot of monetary stimulus, easier financial conditions, just starting to flow through the U.S. economy. So I think the U.S. economy is in good shape, not great shape. There's the trade war, there's politics, there's a lot of things going on, but pretty good shape.
Eric, one very quick final question for you. What happens to the dollar in terms of its strength against global currencies next year?
I think the dollar weakens. I think we're setting up for a weak dollar. President Trump wants a weaker dollar. A lot of other constituents want a weaker dollar.
Certainly, that's been the trend the last couple of sessions. If you take it this week as an example for next week, Eric Stein, thank you very much for joining us, the co-director of Global Income and Portfolio Manager from Eaton Vance. So looking ahead to non-farm payrolls, how are U.S. futures faring up this morning? The three of the major indices are seen opening up in positive territory this after a marginally positive session yesterday. But that is it for Street Signs. This Friday's show is over. I'm Joanna Versace.
I'm Villa Marks. Our weekend starts just about now. Worldwide Exchange up next.
Can we just order a pizza?
Ready then? How'd you order so fast?
We just got back from a beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Ah, Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ah, Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Mate, this van's suspension is rubbish.
Tell me about it.
Even the radio's had it.
I know, but I'd get nothing if I scrapped it.
Actually, you can get at least £2,000 off a new Ford for it.
You're kidding?
With Ford's new for old scrappage scheme, you can get between £2,000 and £6,250 off a new Ford van if you scrap an eligible vehicle with us responsibly. Also, there's 0% APR representative on Ford Acquire. Ford Commercial Vehicles. Backbone of Britain. Search Ford Scrappage. Exclusions apply. Contract and register by 31st of December 2019 at participating dealers. Agent ownership criteria apply to scrappage vehicle. Subject to status. Free post full credit. Deposit restrictions apply.
Forget the cheese, basket, and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline, into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
A U.S. economy gut check as investors await for the all-important November jobs report. It's due out in just over 3 hours from now. Shocking numbers from Uber, the company going public with a comprehensive report addressing concerns over safety and sexual assault allegations against drivers. And it's day 2 of the OPEC conference in Vienna, Austria, where our own Brian Sullivan is live with the very latest there. And welcome to the $1 trillion club. Saudi Aramco out with numbers ahead of its public market debut in what will be the world's largest IPO. And Masason speaking out. The SoftBank chief out with new comments weeks after his $1 billion WeWork bailout as Worldwide Exchange begins right now.
Money, 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 must be funny in the rich man's world.
Good morning and welcome to the show. It's Friday, December 6, 2019. I am Dominic Chu in for Brian Sullivan this morning, who is in Vienna, Austria, as you can see there this morning, covering OPEC's biannual meeting. He'll have the latest from that summit in just a few moments. Thanks very much for that wave, Brian. We appreciate it. Now let's take a look at what's happening with stocks, because the major averages are fractionally lower for the week. The Dow is on track for its worst weekly performance since mid-August, but today things are shaping up slightly positive. The Dow Jones would open up by about 73 points if these futures moves hold into the opening bell for cash equities trading. The S&P up by 8 points and the NASDAQ up by 29. On the bond side of things, we're still keeping a close eye on that 10-year benchmark U.S. Treasury note yield. It's ticking slightly higher here, 1.797% the last trade there. 2-year benchmark note yields 1.59%. Let us now go worldwide. In the Asian trade, generally a positive result there. The Nikkei in Japan up 0.25%. The Hang Seng in Hong Kong up 1%, and the Shanghai Composite 0.5% as well. By the way, 1% gains for the South Korean Kospi. Stocks there ending the week on a high note, posting their biggest weekly advance in nearly 2 months. Now, in the European trade, in Germany, a big miss in industrial production. October numbers seeing their biggest drop since April, falling 1.7% on a month-over-month basis. The estimates there were calling for a 0.3% rise, but you can see here the German DAX up 1/3%, the CAC in France 0.5%, and the FTSE 100 in the UK up 0.75%. So let's get a look at some of the other top stories we are following today. Insurance giant Phoenix Group Holdings says it has agreed to buy the British unit of Swiss Reinsurance for $4.1 billion in cash and stock, the company's biggest acquisition to date. The deal is just the latest in a rapidly consolidating sector as many insurers hit by tougher capital rules since the financial crisis look to kind of shore up their balance sheets and their books to free up some capital. Those shares both, by the way, higher in pre-market trading. Between the U.S. and China, outside the world of trade, U.S. Secretary of the Treasury, Steven Mnuchin, and several other U.S. lawmakers are objecting to the World Bank's plan to offer China between $1 and $1.5 billion in low interest rate loans through June of 2025 to support the country's structural and environmental reforms, saying he wants the bank to, quote unquote, graduate China from its concessional loan programs for low and middle income countries. Now, at the same time, more upbeat headlines ahead of a possible phase 1 trade agreement. China says it will waive import tariffs for some soybeans and pork originating from the United States. China's finance ministry says the waivers are being implemented based on applications by individual U.S. firms. No specific quantities of overall purchases were mentioned there. Well, back to the markets overall. Stocks pointing right now to a third straight day of major gains for the major averages. This as investors await for those results of the November jobs report due out in just over 3 hours from now. As you can see there, 3 hours and 25 minutes. Economists are expecting employers added 187,000 new jobs, and the unemployment rate should hold steady at around 3.6%. Those are the expectations going into those numbers. So joining me now is Palisade Capital Management's Dan Veru. Good morning, Dan, to you. Let's talk about the setup right now for the economy in the U.S. and abroad and how the markets are treating it. Is this a scenario where the economy can justify the markets at these near record high levels?
It gets very difficult, Dom, without having a trade deal. Trade right now is a tax. It's a tax on consumers and businesses. If that tax goes away, it's like a pile of dry wood, but it's been raining. When the rain stops, the fire's going to get lit, and I think this economy can really accelerate going into next year.
So if it is a case where you're thinking to yourself, this could be an event and it's driven mainly on trade, is it fair to then try to adjust your allocations, your performance, your trading around trade headlines? It seems as though there have been some whipsaws in the action. You can't really trust any one headline. So can you make those decisions based upon your expectations for trade? And should you be making those expectations for trades based upon those?
That's a very difficult thing to do, but we've written a paper, and it's available on our website at palisadecapital.com. My colleague Will Potter and I, along with senior members of our risk team, basically wrote a strategy piece on how to position your portfolio and what key performance indicators, the financial metrics you should zero in on.
So take us through that then. I mean, so you've taken the time to put together this report, this research for your clients. What are the big takeaways? How exactly do you position from a strategy standpoint, given what we know or don't know about China trade?
We start with companies that generate excess cash. You have to start there because if you're going to go into a period where things get really bumpy, you're going to want to have those companies that can weather through that environment and actually take advantage of an environment where others are perhaps denied capital. Right now, you've got high yield and high grade bond spreads at record tight levels right now. But we're looking at companies that are functionally self-funding. The best metrics that have proven to us to be weather through good times and bad times is return on invested capital. And we show in all periods, 5, 10, 15, 20, 30-year periods, that if you focus on companies that have high ROIC, they outperform the underlying.
So what kinds of companies are they then? I mean, are there specific names you're looking at, specific parts of the industrial group or sectors overall that you're looking at? Which ones are there?
We're really industry agnostic, though we have not found real value in the energy space right now because those companies don't cover their cost of capital at this point, and they are somewhat highly levered, and they're not disciplined in their capital allocation. That's another very important part of our analytical process, is to find businesses where there's a culture in the business of allocating capital in a very positive way. The energy industry, unfortunately, has been undisciplined in terms of how they've allocated capital.
All right, so stay away from energy. Dan Barrow, Palisade Capital, thank you very much for your thoughts.
Thank you so much.
We always appreciate it this morning.
Thank you.
Well, turning now to oil and that contentious day one of the OPEC summit. Members are gathering once again this morning after talks on potential deep cuts to production wrapped up late yesterday with no announcement. Brian Sullivan is back with us. He's in Vienna, Austria, with the latest. Brian, over to you.
Hey, Dom. Yeah, good morning. Listen, most of the ministers just arriving here. I mean, I got to say something. They have done a great job of locking it down. A lot of times the ministers will come in, they'll give you a couple of words, sort of perfunctory stuff. This year, almost nothing. I say almost because Bijan Zangana, who is the long-serving Iranian oil minister, who we've interviewed in the past, actually came in and gave us one word. I said, do you expect that we will get a deal today? And he sort of looked over his shoulder and he said, yes. So where exactly do we stand? Okay, well, the meeting wrapped up at 11 o'clock last night. No signed deal. A lot of rumors out there about how much they might cut. I'll get to that in just a second. At one point, my sources inside the meeting said that Iran had left, got a little frustrated, but then eventually did come back. Now, the meeting will resume today. This time it's called OPEC Plus because you have Russia. And then you can go ahead. It's fine. It's with live TV. It doesn't bother me. Everyone's working. OPEC, a lot of, it's about, remember, it's okay. It's about 200 to 250 journalists that are here. So remember, they're all going in because the ministers can start to talk. We're hoping to get a couple of words. So no deal yet. Russia started. Now that the conversations begin today, there is hope for a deal. What is that deal, Dom? Well, you probably saw the reports. Right now, the current deal is for 1.2 million barrels a day, sort of reduction that ends in March. Now they're talking about another 500,000, so that'd be 1.7 million barrels a day. Why hasn't oil reacted a little more? Because you got to remember, some countries like Saudi Arabia are overcutting already. So if they just kind of go back to their quota, most of the folks that we've talked to said even if they get 1.7, they're probably not going to take that many barrels actually off the market. Also because you've got this Norwegian field, which just opened up. They're already doing 350,000 barrels a day. And of course, U.S. shale continues to pump. So day two, Russia's here. Hopefully a firm signed deal, likely 1.7. If they can stretch it to the end of the year, Dom, that would probably be the only thing that would actually be bullish for the price of oil. Anything else, you're looking at neutral, flat to maybe down.
All right, so we'll keep an eye on that price action. Of course, headlines always driving things out of OPEC and Vienna. Brian Sullivan, thank you very much. We'll see you later on in the show. When we come back here, Uber, for the first time ever, publicly releasing its own data on sexual assaults and other safety concerns surrounding its riders and its drivers. Plus, what SoftBank's Masa Son and Alibaba co-founder Jack Ma have to say about their animal instinct style of investing. And then later on, how KFC is warming up your holiday Yule log with 11 herbs and spices. Yes, it's back. A very busy hour still ahead when Worldwide Exchange returns right after this.
Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't. In real life. Brent Cross, London. Free parking for all sleighs and cars.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi. Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
Ah, Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
What better way to celebrate the holidays than with a subscription to